Why don't you first start, though, with what the mechanics are, a closed-end fund versus an ETF, because I really feel that's at the heart of the potential disagreement.
Yeah, a closed-end fund, the shares are issued, and there's no way to do, there's no creation redemption process. So the shares trade, and they deviate from the value of the stocks. So people don't like this. It's like a third element introduced to investing. So like Bill Ackman's London Pershing fund is currently trading, I believe, at like a 27–30% discount.
Pretty hefty.
Yeah. Now, why is that? Like, you'd think that's a great deal, but it's not always a good deal because it was trading at like a 50% discount, so you could lose money. This was the problem with GBTC. People just want to pay for something for like close to what it's worth, whether you're shopping for a car or a fund. This is why closed-end funds have just been pushed aside on the evolutionary highway. They're like roadkill.
Yeah.
No one launches them, no one likes them. And even he said that his investors were asking, well, I don't want to buy your IPO before it comes out because it might go to a discount. I'll wait.
Yeah.
So he couldn't raise money. And I understand why they would say that.
So the point that I would make, I think we agree that it would solve a lot of problems when it comes to the IPO process, because why would you buy it in the IPO when you can just wait for it to go on sale? But you think about the fact that investors maybe don't like closed-end funds. Issuers love them because you have that pool of permanent capital. And you think about, Bill Ackman and Pershing Square, they haven't been too active on the activism front over the past couple of years. But if they wanted to go down that route again, it probably would be helpful to know how much they have actually under management. Whereas an ETF, everything can theoretically leave in a single day.
True. 2 points on that. First of all, you can sell your closed-end fund. That's why it's at a discount. So it's not totally permanent, but I hear you. The other thing is ETF investors are stronger hands than most people think. Look at Cathie Wood. I know she's seen some outflows this year, but the amount of money that's stuck despite like 2 really bad years in a row. Look at the Bitcoin ETFs. The money is hung in there despite like some really good, big tests of drawdowns. So I just think the investors that go in who are buying his strategy are smart. ETF investors are intelligent. They found the ETF. I think they'll be the money will be stickier than people think. And furthermore, again, the closed-end fund trading at a deep discount. Again, this doesn't reflect well. It's like I'd rather sell your shares even though they're trading below what they're worth because I don't want to be in the fund. I just think ETFs eliminate the third way. And we've got Rubini, Tom Lee, Scott Bessent. All these like heavy hitters are coming into the ETF space. He will be in good company if he launches an ETF.